Impact Report, projected 50% increase in adoption rates across gaming, supply chain finance and social media by Q1 2025. Date, February 2, 2025. Time, 21 hours 52 minutes and 34 seconds. Executive Summary. By Q1 2025, significant shifts in adoption rates across four key sectors, gaming, supply chain finance and social media, are projected to increase by 50%. This report explores the driving factors behind this predicted growth, including technological advancements, evolving consumer behaviors and strategic adaptations from global competitors. Overview of sectors. 1. Gaming sector. Current trends. The gaming industry is experiencing unprecedented growth fueled by innovations in augmented reality AR and virtual reality VR. The shift toward mobile and cloud-based gaming platforms is set to attract a wider audience, thereby enhancing engagement and monetization strategies. Future projections. Analysts predict a surge in mobile gaming, with AR and VR technologies expected to redefine the user experience. This sector is anticipated to be a major contributor to the overall increase in adoption rates. 2. Supply chain sector. Technological innovations. The integration of artificial intelligence AI and blockchain technology is transforming supply chain operations, providing enhanced transparency, efficiency, and security. These advancements enable firms to utilize predictive analytics to better anticipate demand and manage resources. Expected outcomes. The shift towards more agile supply chains will be central to the sector's growth, with established companies already showcasing successful implementations of these technologies. 3. Finance sector. Market challenges. The finance industry is navigating a low-growth environment characterized by declining interest rates and rising operational costs. Despite these challenges, there is a strong push towards digital transformation, particularly through AI, to enhance customer service and operational efficiency. Strategic focus. Institutions are expected to invest heavily in non-interest income sources, such as investment banking and advisory services, to counterbalance losses from net interest income. The Basel III Endgame regulatory changes may also catalyze mergers and acquisitions (M&A) as banks seek consolidation for greater efficiency. 4. Social media sector. Evolving landscape. The social media ecosystem is increasingly integrating e-commerce functionalities, enhancing how platforms monetize user interactions. Companies are leveraging data analytics and personalized advertising to boost user engagement. Trends to watch. The rise of short-form video content and influencer-driven marketing strategies is likely to accelerate adoption rates as brands seek to engage more effectively with their target audiences. Common key drivers of change. 1. Technological integration. A critical driver across all sectors is the adoption of advanced technologies such as AI, blockchain, AR, and VR, fundamentally transforming operations and user experiences. 2. Market adaptation. Companies are adjusting their strategies to align with changing consumer expectations, emphasizing personalization and enhanced user engagement to drive adoption. 3. Economic pressures. Macroeconomic uncertainties, including inflation and regulatory changes, are pushing firms to innovate and explore new revenue streams to maintain competitiveness. Timeline of notable events. Q3 2023. Initial projections of sector growth emerge, emphasizing technological advancements as a catalyst for change. 2024. Companies begin implementing strategic changes, particularly in AI and blockchain, to prepare for anticipated market shifts. Q4 2024. Financial institutions gear up for regulatory changes under the Basel III Endgame, setting the stage for increased M&A activity. Q1 2025, a substantial uptick in adoption rates is expected across all sectors, driven by technology integration and strategic adaptations. Detailed sector analysis. Gaming sector analysis. Current developments. The gaming industry is witnessing a transformation as AR and VR technologies become more mainstream. These advancements are creating immersive experiences that attract a broader demographic. Projected growth as mobile gaming continues to dominate. And cloud gaming platforms gain traction. Industry experts predict a significant increase in overall gaming engagement. Supply chain sector analysis. AI and blockchain integration. The adoption of AI for predictive analytics and blockchain for enhanced security is revolutionizing supply chain management. Companies are leveraging these technologies to streamline operations and reduce costs. Future outlook. Firms that effectively integrate these technologies are likely to see improved agility and responsiveness, driving a marked increase in industry adoption rates. Finance sector analysis. Navigating challenges. As banks face declining net interest income, there is a strong push towards diversifying revenue streams through non-interest income channels. Impact of Basel III. The Basel III Endgame may lead to reduced capital requirements, encouraging M&A activities among smaller banks seeking to enhance operational efficiency. Social media sector analysis. E-commerce integration. The blending of social media and e-commerce is reshaping how brands interact with consumers. Platforms are prioritizing personalized content and data analytics to improve engagement. Content trends. The growing popularity of short-form videos and influencer marketing is expected to drive higher adoption rates as brands adapt to consumer preferences. Conclusion. The projected 50% increase in adoption rates across the gaming, supply chain, finance, and social media sectors by Q1 2025 highlights a transformative period characterized by technological advancements and strategic adaptations. Companies must remain agile, embracing innovation and evolving consumer expectations to thrive in this dynamic landscape. As firms across these sectors leverage new technologies and adapt their strategies, the convergence of these factors will undoubtedly shape the future of engagement and operational efficiency. The content presents several counterintuitive insights within the projected 50% increase in adoption rates across the gaming, supply chain, finance, and social media sectors by Q1 2025. Here are some key points that may not align with conventional expectations. 1. Gaming sector growth despite economic pressures. While many industries may struggle in a low-growth environment, the gaming sector is projected to thrive. This contrasts with traditional views that economic downturns lead to reduced discretionary spending. The anticipated growth stems from advancements in AR and VR technologies, suggesting that consumer demand for immersive experiences may remain resilient even during economic uncertainty. 2. Supply chain transformation. Overcoming complexity. The expectation that AI and blockchain will simplify supply chains may seem counterintuitive given their complexity. Typically, technological advancements introduce new challenges. However, the forecast indicates that these technologies will enhance transparency and efficiency, suggesting that innovation can lead to simplification rather than complicating operational processes. 3. Finance sector M&A activity. In a low-growth environment, the forecast that banks may pursue mergers and acquisitions M&A despite a low-growth and low-rate environment challenges the common assumption that such activities are only pursued during economic booms. The Basel III Endgame potentially lowering capital requirements could incentivize consolidation, indicating that strategic opportunities exist even in challenging financial climates. 4. Social media monetization through e-commerce. The rise of e-commerce functionalities in social media platforms implies a shift from content-driven engagement to direct monetization strategies. This may seem counterintuitive, as many social media companies have traditionally relied on advertising revenue. The blending of social interaction with commerce reflects a significant evolution in how these platforms generate income, suggesting that consumer behavior is shifting in favor of integrated shopping experiences. 5. Increased focus on non-interest income and finance. As banks anticipate challenges in net interest income due to lower rates and high deposit costs, the emphasis on boosting non-interest income may seem counterintuitive. Typically, banks focus on interest income as a primary revenue source. However, the shifting landscape necessitates diversifying income streams, indicating a fundamental change in banking strategies as institutions adapt to new economic realities. 6. AI adoption in finance. Despite legacy systems, the notion that banks will successfully implement AI-driven strategies while grappling with outdated legacy systems is counterintuitive. Many assume that technological advancements require modern infrastructure. However, institutions may find ways to leverage AI and generative AI tools to enhance operations even within existing limitations, underscoring the potential for innovation within constraints. 7. Cost management as a growth strategy, instead of merely focusing on revenue growth. Banks are recognizing that sustainable cost management can be a pathway to profitability. This approach contradicts the traditional view that growth must be fueled by revenue increases. By fostering a culture of cost consciousness and integrating automation, banks can enhance productivity and resilience, demonstrating that managing expenses is as critical as driving revenue. 8. Global competitiveness amid regulatory changes. The expectation that regulatory changes such as the Basel III Endgame will create a more favorable competitive landscape for banks challenges the assumption that regulations universally hinder industry performance. Instead, these adjustments could facilitate strategic maneuvers like M&A, indicating that regulatory environments can be leveraged for competitive advantage. The convergence of these insights suggests that sectors can adapt and thrive in unexpected ways, defying traditional economic expectations and demonstrating resilience through innovation and strategic shifts. The report presents a significant projection of a 50% increase in adoption rates across 4 key sectors: gaming, supply chain finance, and social media, by Q1 2025. While the summary highlights various trends and projections, there are several nuanced insights that many might overlook but which are crucial for understanding the broader implications of these changes. 1. The role of technological integration across sectors. While the report emphasizes the integration of technologies such as AI, blockchain, and AR/VR, what is often overlooked is the impact of these technologies on consumer behavior and market dynamics. For instance, in the gaming sector, the use of AR and VR not only enhances user experience but also creates new business models, such as subscription-based gaming and in-game purchases. This shift is significant as it reflects a larger trend of consumers becoming more accustomed to digital interactions, thus paving the way for further technological adoption in other sectors. Significance. Understanding this trend is vital for companies looking to innovate and adapt to consumer preferences. Businesses that leverage these technologies effectively can create competitive advantages, while those that lag may find themselves irrelevant. 2. Supply chain innovations beyond efficiency. The report mentions AI and blockchain's roles in enhancing transparency, efficiency, and security in supply chains. However, a crucial aspect that might be overlooked is how these technologies facilitate sustainability initiatives. For example, blockchain can enhance traceability in sourcing materials, allowing companies to demonstrate ethical practices and reduce their environmental footprints. Significance. As consumers increasingly prioritize sustainability, supply chains that integrate these technologies can not only improve operational efficiency but also enhance brand reputation and customer loyalty. This dual focus on efficiency and sustainability can lead to a more resilient business model in the long term. 3. Economic factors influencing financial services. The financial sector's narrative revolves around adapting to a low-growth environment, yet the potential impact of the Basel III Endgame on M&A activity is often under-discussed. The anticipated reduction in capital requirements could lead to increased consolidation in the banking sector as institutions seek to optimize their operations. Significance. This shift may reshape the competitive landscape, creating new market leaders while pushing smaller banks to either adapt or face obsolescence. Understanding this dynamic is crucial for investors and stakeholders in the financial services industry, as it can influence investment strategies and market positioning. 4. The evolution of social media and e-commerce integration. The report notes the evolution of social media platforms toward integrated e-commerce functionalities, which is a significant trend that may be underestimated. The merging of social media and e-commerce not only changes how brands connect with consumers but also how data analytics can be leveraged to personalize user experiences and improve advertising effectiveness. Significance: companies that fail to adapt to this integration risk losing market share to competitors who can capitalize on these new avenues for consumer engagement. The ability to analyze data effectively will be a key differentiator in this evolving landscape. 5. Common economic pressures across sectors. The report highlights economic pressures such as declining interest rates and rising operational costs. But it also implies a common thread: the need for diversification in revenue streams. Each sector is facing unique challenges, yet the underlying need for innovation and adaptation remains constant. Significance: companies that recognize the interconnectedness of these challenges across sectors may be better positioned to develop comprehensive strategies that address both operational efficiency and market demands. This holistic approach can lead to sustainable growth and mitigate risks associated with economic fluctuations. 6. Consumer behavior transformation. As technological advancements influence consumer interactions, there's an underlying shift in consumer expectations regarding personalization and engagement. The report touches on this but may not fully articulate how these shifts can redefine customer loyalty and retention strategies across sectors. Significance: businesses must understand that consumer loyalty is increasingly tied to experiences rather than products alone. Companies that prioritize user engagement and build strong relationships through personalized experiences will likely outperform those that do not adapt to these evolving consumer expectations. 7. The importance of data analytics. While data analytics is mentioned in the context of decision-making, the transformative power of predictive analytics in anticipating market trends and consumer behaviors is often underappreciated. Industries that invest in sophisticated data analytics capabilities can gain insights that drive strategic initiatives. Significance: for businesses, the ability to predict trends and respond proactively can be the difference between leading the market and reacting to it. This proactive approach can enhance competitive positioning and operational efficiency. 8. Regulatory responses and their implications. The anticipated changes brought by the Basel III Endgame and regulatory adaptations in various sectors signal a critical area often overlooked in strategic planning. Regulatory shifts can create opportunities for some institutions while posing challenges for others, especially smaller banks. Significance: companies need to stay abreast of regulatory changes and incorporate compliance and strategic planning into their business models. Understanding these dynamics can prevent potential pitfalls and capitalize on new opportunities arising from regulatory transformations. Conclusion: the projected increases in adoption rates across gaming, supply chain finance, and social media sectors reflect a broader trend of technological integration, economic adaptation, and changing consumer behaviors. Recognizing and addressing the nuances highlighted above can be pivotal for companies aiming to navigate the rapidly evolving landscape effectively. By focusing on these often overlooked aspects, businesses can better position themselves for sustainable growth and resilience in an increasingly complex market environment. 1. Technological integration is a key driver. The projected 50% increase in adoption rates across the gaming, supply chain finance, and social media sectors is heavily influenced by the integration of advanced technologies such as artificial intelligence, AI, blockchain, and augmented/virtual reality (AR/VR). In gaming, AR and VR are revolutionizing user experiences, while in supply chains, AI and blockchain are enhancing transparency and efficiency. In finance, AI is pivotal for digital transformation, and social media is leveraging technology for personalized advertising. This technological convergence is not just a trend, it represents a fundamental shift in how businesses operate, pushing sectors toward greater innovation and improved customer engagement. 2. Market adaptation strategies. Companies across these sectors are adapting their strategies to meet evolving consumer expectations, emphasizing personalization and engagement. For instance, the gaming industry is seeing a boom in mobile and cloud gaming, while social media platforms are integrating e-commerce functionalities to drive interaction and monetization. The finance sector is focusing on diversifying revenue through non-interest income amid challenges from low interest rates. This adaptability is crucial for sustaining competitive advantage in a rapidly changing market landscape. 3. Economic pressures and the financial landscape. The finance sector is facing significant economic pressures, including declining interest rates and rising operational costs. This environment is prompting banks to innovate and diversify revenue streams, such as through investment banking and advisory services. The Basel III Endgame, which may lower capital requirements, is expected to spur mergers and acquisitions as banks consolidate to optimize operations. This highlights the interconnectedness of external economic factors and internal strategic decisions within financial institutions. 4. The evolving role of data and analytics. The importance of data analytics is emerging across all sectors as a vital tool for driving decision-making and operational efficiency. In supply chain management, predictive analytics is being utilized to anticipate demand fluctuations, while in finance, AI-driven analytics enhance customer service and operational processes. Social media companies are harnessing user data for more effective advertising strategies. This evolution signifies a broader recognition of data as a strategic asset, leading companies to invest in advanced analytics capabilities to gain insights and improve performance. These 4 points provide a comprehensive framework for analyzing the projected changes in adoption rates across the specified sectors, emphasizing the importance of technology market adaptation, economic context, and data utilization in shaping future strategies. 1. The Industrial Revolution 1760 to 1840. The Industrial Revolution marked a significant turning point in history, resulting in a profound transformation of economies, societies, and industries. It was characterized by the shift from agrarian economies to industrialized and urbanized ones, facilitated by advancements in technology such as the steam engine, textile machinery, and iron production. The increased adoption of machinery and factory systems led to a surge in production rates, the creation of new jobs, and the rise of a consumer society. This monumental change prompted businesses to adapt their strategies in response to the evolving economic landscape, much like how today's sectors are projected to adapt to advances in technology and consumer behavior. 2. The dot-com bubble 1997 to 2001. The late 1990s saw the rapid rise of the internet, leading to the dot-com bubble, where many internet-based companies experienced exponential growth in adoption and investment. This period was characterized by the proliferation of online businesses and a dramatic increase in the use of digital technology across various sectors, including retail, finance, and media. The eventual burst of the bubble in 2001 led to a re-evaluation of business models and strategies in the tech sector, forcing companies to focus on sustainable growth and profitability. The impact of the dot-com bubble serves as a historical analogy to the current surge in adoption rates across sectors due to technological advancements like AI and blockchain. 3. The global financial crisis 2007 to 2008. The financial crisis had a profound impact on the global economy, particularly in the finance sector. Triggered by the collapse of the housing market and excessive risk-taking by financial institutions, the crisis led to widespread economic downturns and the need for significant regulatory reforms. In response to the crisis, banks and financial institutions adopted new strategies focused on risk management, transparency, and technological integration to enhance operational efficiency. The subsequent shift toward digital banking and fintech solutions illustrated how companies must adapt their strategies to navigate changing economic landscapes and regulatory frameworks, mirroring the adaptations projected for the finance sector by Q1 2025 in response to current technological advancements. Future outlook: projected 50% increase in adoption rates across gaming, supply chain finance, and social media by Q1 2025. Overview. By Q1 2025, significant shifts are anticipated across four key sectors: gaming, supply chain, finance, and social media, with projected adoption rates increasing by 50%. This surge is driven by technological advancements changing consumer behaviors and competitive adaptations from global players. Sector predictions. 1. Gaming sector. The gaming industry is on the brink of a transformation fueled by AR and VR technologies. By 2025, increased engagement, the rise of mobile and cloud gaming platforms will attract a broader audience, particularly among casual gamers. Monetization strategies. Improved monetization strategies such as subscription models and in-game purchases will enhance revenue streams. Esports growth. Continued expansion in esports will further boost engagement and legitimacy in the gaming sector. 2. Supply chain sector. The supply chain landscape is set for a revolution through the adoption of AI and blockchain technologies. Enhanced efficiency. AI will enable predictive analytics for demand forecasting, optimizing inventory management. Blockchain integration. Blockchain will enhance transparency and security, reducing fraud and inefficiencies. Agility. Firms will increasingly adopt agile supply chain practices, allowing for quicker responses to market changes. 3. Finance sector. In the finance industry, institutions will navigate a precarious environment characterized by low growth and declining interest rates. Digital transformation. Banks will prioritize AI-driven customer service enhancements and operational efficiency improvements. Regulatory changes. The Basel III Endgame may prompt mergers and acquisitions as banks seek to consolidate resources and optimize operations. Diversified revenue streams. Financial institutions will focus on increasing non-interest income through investment banking and advisory services, offsetting declines in net interest income. 4. Social media sector. Social media platforms are evolving into e-commerce hubs. E-commerce integration. Increased functionalities for direct shopping will enhance user engagement and monetization potential. Data analytics. Enhanced analytics will enable personalized advertising, improving ad effectiveness and user experience. Content trends. The popularity of short-form and user-generated content will drive engagement, with brands leveraging influencer partnerships for broader reach. Common key points. 1. Technological integration. The integration of advanced technologies across all sectors is a major driver of adoption. 2. Market adaptation. Companies are adapting strategies to meet evolving consumer expectations, emphasizing personalization and user engagement. 3. Economic pressures. Firms are innovating in response to macroeconomic uncertainties, diversifying revenue streams to mitigate risks. Timeline of events. Q3 2023, initial projections for sector growth and technological advancements emerge. 2024, companies begin implementing changes based on emerging trends, particularly in AI and blockchain. Q4 2024, financial institutions prepare for regulatory changes under the Basel III Endgame. Q1 2025, significant increases in adoption rates are expected across all sectors, coupled with strategic adaptations to leverage new technologies. Conclusion. The convergence of technological advancements, economic pressures, and evolving consumer preferences will significantly impact adoption rates across the gaming, supply chain, finance, and social media sectors by Q1 2025. Companies must remain agile and innovative to capitalize on these forthcoming changes, ensuring they meet the demands of a rapidly evolving landscape. Implications for businesses. To thrive in this environment, businesses should invest in technology, prioritize investments in AI, blockchain, and AR/VR to enhance operational efficiency and customer engagement. Adapt business models, explore new revenue streams, and adjust business models to reflect changing consumer preferences and market dynamics. Focus on customer experience, leverage data analytics to provide personalized experiences, enhancing customer loyalty and satisfaction. Monitor regulatory changes, stay informed about regulatory shifts, particularly in finance, to navigate compliance and capitalize on opportunities for growth. By strategically aligning with these trends, organizations can position themselves for success in an increasingly competitive and technology-driven future.